All right, so this might take a minute to get live broadcasting here. We'll give it just a second. Just going to refresh over here. So thank you for those that are just getting tuned in. We're going to get started in just a minute. This is a live broadcast, and I'll be teaching how to buy the dip. All right, so this is, this is something that has been very topical in the last year. Everyone's talking about buy the dip, buy the dip. So what does that mean? How does it work? This is a strategy ultimately of trading and investing, buying dips. So what I'm going to teach you today is actually an excerpt from the Warrior Pro curriculum. Obviously, I don't need to introduce myself. You guys who are tuned in here, you know who I am. You know I've been trading for a long time. You know probably that I took a tiny account, less than $600, and have now turned it into about $9.5 million in gross profit. That's gross before fees, taxes, commissions, things like that. So you can check out my statements on warriortrading.com down at the bottom if you want to see those. We do have them audited. And I should always say my results are not typical. The typical result for most day traders is that they lose money. Trading is very risky, and a lot of people who come into the market to trade actually find themselves simply gambling and losing money. So be very, very cautious as you approach trading, and you should trade in a simulator before you ever put real money on the line. So with that said, I do want to jump in here and teach you guys this class today about dip trading. So I do have the chat feed over on the side, so I'll be able to see some questions posted in real time as we're going through, and I'll also save some time at the end to do Q&A. Those that are tuning in just on audio, I'm going to try to be very articulate, so if you're just listening while you're driving or doing something else, I hope this will still be valuable for you and helpful. Again, this is an excerpt from the Warrior Pro curriculum. If you are interested in checking out our entire curriculum, go to warriortrading.com/strategy. warriortrading.com/strategy, and there you'll see the entire curriculum, the Warrior Starter, the Warrior Pro, and everything else. My goal is to teach strategy. Now, that probably sounds like exactly what you've been looking for, and funny enough, it's not what most people teach. Most people teach general concepts of the market, which is all fine and well and very easy to teach, even if you're not a profitable trader, which many people who teach are not actually profitable. They teach, and that's fine. They're great teachers, but they may not be profitable traders. I'm a profitable trader, and I want to teach you the strategy that I use every single day. This is primarily a momentum-based strategy. Remember that a strategy is a set of rules that you use to trade the market every single day. You have to be consistent in the way you apply or implement that strategy. Inconsistencies lead to losing trades and then lack of profitability, and ultimately that's not going to work. So I'm just going to kind of cut right to it, and let's get into strategy. Momentum trading is my strategy, which means I generally am trading instruments, we'll define that further as stocks, which are shares of companies, that are moving up quickly. So if something is going sideways, I'm not interested. I'm looking for things that are moving up quickly. And dip trading is a component for me of momentum trading. Now, when some of the dip trades that I'm going to show you are going to be inverse, and it's a stock that has strong momentum, but it's actually going down, and I'm going to buy that dip for the reversal coming back up. Ultimately, this sort of mini class I'm going to teach you today is broken down into 3 styles of buying the dip. The first is buying what is really just simply a pullback. So a stock is generally strong, but starts to pull back, and you buy the pullback and then ride that momentum as it starts to curl back up through new highs. Easier said than done, but that's the summary of buying the dip in the first style. The second is buying a panic sell-off. So you have a stock that does a panic flush. It just tanks. It drops really, really hard, and it can be anywhere from 5%, 10%, 20%, could even be 50%. It just does a huge washout flush, panic sell, and you buy and catch that spring right back up. You have to be careful because that's a very risky one. I'm going to show you live trading examples of each of these 3 types of dip trading. The third type of dip trading is when a stock has been selling off, it's at low of day, it's very, very weak, and you're buying anticipating that it's about to change directions. And I have an example of doing this on Norwegian Cruise Line Holdings during the big panic sell and everything else that was going on in 2020. Obviously, cruise lines were getting the stock prices were just terrible. They were dropping really, really hard. But we did get some nice dips off the low, or bounces off the low. So that's a little bit of a different type of dip trade. But when we talk about buying the dip, those are sort of the three types that we're going to review today. All right, so again, buying a pullback, number one, buying a panic flush, number two, and buying what's really more of a reversal, which is number three. All right, so I do discuss dip trading both in Chapter 8 of the Warrior Pro class of momentum trading and Chapter 9 of reversal trading. Both of those chapters do discuss dip trading in these various forms. Okay, so let's go ahead and jump in. Before I do, I'm going to put up my disclaimer and do a little intro video, and then we'll jump right into the class. Okay. All right, so why don't we go ahead and jump in here. Thank you, by the way, for everyone who's tuning in live. I appreciate you guys hitting the thumbs up, and hopefully you're subscribed to the channel. Okay, so this is the curriculum right here. This is going to be what we're going to cover today. So I'm going to full screen this. So Chapter 8, Technical Long Setup 8, the dip trade. All right, so this is setup number 1, which is a dip off support. And so this is the pullback type of setup. So we have a stock that's generally strong, but is experiencing a little bit of a pullback, and that for me is an opportunity to be a buyer. So let's look at an actual chart. This is a stock, as you can see here, that went from about $6.50 up to $9 a share. The stock was up well over 50% on the day. It was a big momentum stock. If you're curious about how I find these types of stocks, this would have been what we call a gapper. So it was gapping up. If you haven't checked out my video on gap trading, you should check that out as well. I'll put that link right down in the comments here, Gap and Go. And you guys can watch that if you haven't already. All right, so this is a stock that was gapping up. Most likely it had some type of news catalyst, which is why it was moving up pre-market. At the open, so gray here is pre-market, and then when it turns darker black charcoal, that's market open at 9:30. So of course stocks do trade in pre-market hours. At 9:30 the bell rings and it sells off. It pulls back a little bit. Around 9:45 it kind of tries to break over the volume weighted average price, which is a technical indicator. It's not able to. It gets back below it. It tries again around 9:50, can't do it, and then it does break it just before 10 a.m. It squeezes up to 750. But then this ends up sort of double topping at its previous high a day around 750, pulls back to the VWAP, but then off that level, it ends up curling, and around 10, whatever it is, 10:05, 10:10, it starts to break out to new highs. This second arrow right here represents a possible dip trade. And this would have been a dip off support, or in this case, a double bottom entry. So a double bottom, it had previously pulled back to a low of 773 on this candle. And you can see how some traders might prefer just to be a buyer over 823, which was the high of this candle here, or maybe even over the high of this candle here. Now I can get my drawing tool up here just to make it a little easier for you to see. So we're looking at right in this area for those who are watching the screen. So here's a double bottom dip. So an entry there at 773 is pretty nice because you can manage your risk against it being a previous double bottom, and then 750 is psychological support, the $0.50, but then just below that is the volume weighted average price. So you kind of have this support 1 and support 2 very close together. So a dip at 773, logical stop is probably around 750. You're risking around 23 cents a share. It immediately gets back over 8 and then squeezes over 823. Now this is a spot where me being pretty aggressive would probably start a position down here at 773 and add at $8, which moves my cost basis up to probably 785. And then I would add again at 823, which is going to move my cost basis up again, maybe do at this point about $8. So if I started with 5,000, add another 5,000, add another 5,000 shares, I would have about 15,000 shares of this type of stock at $8 a share. It then squeezes up to 850, does a micro pullback, and this is a scenario where in some instances I would take half off the table at around 850 for $7,500 of profit. And in other instances, I would add at 850 because now it's really showing some strength. It's proving itself. And so I could do anything from add another 15,000 shares and now be long 30,000 shares, but with an average of 825. And as it goes up to 9, that could become a $20,000 winner. Or I could just add another 5,000 shares. Cost basis is now maybe 805, 808, something like that with 20,000. And as it goes up to 860, 870, I'm up $10,000 to $15,000 on this trade. So the initial entry, double bottom, dip right here. And I would have already known while it was consolidating right here that the previous low was 773, the low of that red candle. And so I would have been watching that level. If it dips down to that level, it's a possible dip for a pop right back up. This is a 1 minute chart, 1 minute time frame. A 5 minute chart you could have used as well. This would have been a 5 minute little flag pattern. Breakout traders, more often than not, would be buyers over 823, which is sort of the pivot, or over the actual high, which might have been like around 830. That's also a place where we would typically see short sellers cover at the highs. Usually if I'm long, my stop would be if it breaks below the low of a recent move. So if you're short, your stop would be if it breaks above the high, which in this case is right there. So that's why as it breaks through that level, we expect volume to come in. And we do see some nice volume right there. And then this is a 1 minute micro pullback right under the $0.50 of 850, psychological resistance. It breaks through and goes up here to 875 and breaks actually over $9. So that would have been a double bottom type of entry. You can even see on this one, however, that you could have possibly taken a trade right in this area as a dip off the volume weighted average price. You maybe could have done it right here and that didn't really do a lot. It dipped again and then it worked. So sometimes that can work. In this particular instance, I would also note that this appears right here to be a descending resistance line. So if you kind of draw it like that, you can see how the stock was below it, tapped it twice. So once it taps it twice, we would draw there and there. It ran into it here and couldn't break it. Then it got above it, but often when they get above it, they come back down and retest it. So we could also potentially call this a dip off of a descending support. These are all variations of buying a dip off support. You have ascending support, you have descending support, you have double bottoms, you have double bottoms at $0.50 and whole dollars, you have volume weighted average price. So we in the classes go into each of these variations sort of in detail with live trading archives so you can understand the differences. They're very similar, but they're different sort of circumstances for when I would trade them and when I wouldn't. Generally speaking, I'm going to be more bullish buying dips when a stock is trading above the volume weighted average price. Okay, so this right here is another double bottom. So this is a stock that you can see pre-market had a pretty big range. This is a candle, but it's on light volume. So we would typically consider that to be an algorithm. They created that candle, not a valid candle that was that red. So it goes sideways. You've got this low here at 405, which is right above the whole dollar, psychological support. Then it bounces up nicely. Now in this case, that's just a bounce off of whole dollar. I'm not really looking at that trade as much as I'm looking at this one right here. This is a dip right off 4. This is a double bottom entry. So you've got the low, you've got the second low right here, double bottom off of 4. And this is the type of trade where a dip trade, sometimes you'll just get 5-10 cents a share. You're buying a double bottom off support of 4, it goes up to 410, 412. Sometimes you get a move all the way back to the highs, whatever those were. And you don't always know what it's going to do. But when I first get in, some of the things that I look for will be a bid stack. So on the level 2, I want to see a large buyer. So if there's a big buyer at $4, which I can, of course, see in market depth, then that might give me the confidence to punch the buy button at 401 or 402. If there's not a big buyer, I might not be certain it's going to hold, so might watch to see if it actually breaks and then gets back above that level, and then consider the trade. And sometimes I miss the trade because when I'm thinking about getting in, there's a really big sell order. There's a 50,000 share sell order at 405, and I'm thinking, I don't know, this is a double bottom, but there's a big seller, so I don't think I can go ahead and buy the dip here with that big seller in the way. So it's not just the chart pattern. The level 2 also has to support the entry. I'm not going to talk as much about level 2 in this particular class. So here's another really nice example of a stock that USEG. So it squeezes up from $4 all the way up to $22 a share. That is a huge move. There's no doubt about it. But it does retrace the majority of the move from 22 back down to $9. So the move started early, around 7 a.m., pulls back. So at 8:45, volume starts to come back in, and it comes back up to the volume weighted average price. And right here where we have this white arrow, there was actually a little bit of a micro pullback below VWAP. So we had the volume weighted average price, and there was a micro pullback just below that level. It breaks through that level. So let's say you missed the trade. You sat down at, just a couple minutes before 9 a.m., you see it at the high, and you're thinking, man, okay, the stock is clearly strong. Where can I be a buyer? And I would say anywhere above VWAP and anywhere close to VWAP but above it would be good. So in this candle right here, when it comes down and bounces right off the volume weighted average price, that becomes a great dip entry. That's a dip off the psychological support of the volume weighted average price. So how would you actually execute an order that quickly? So the way I would typically do it is by pressing Shift 1, which would be my hotkey, to press the buy button. So that's a buy order for 1,000 shares. So boom, just like that, I can be in with 1,000 shares as a starter. And that's typically what I do when I'm buying a dip, because sometimes these can dip lower, and you have to be careful that you're not catching a falling knife. So one of the things with the catching a falling knife and buying a dip, in both instances, you're buying something that's dropping, right? So that, that's what they say about catching a falling knife. You buy something that's dropping, it's going to just keep going, and you're going to get burned. You try to catch a knife that's falling, you grab it the wrong way, and you're going to get a cut. Well, okay, that's true. But when something is dropping, and this is in the world of stocks, there are levels where we will expect to see support. Okay, so support are going to be these universally respected levels that traders all around the world see and understand. Volume weighted average price is a big one. The moving averages are also pretty big. The 200 moving average is a pretty significant one, which was the magenta line here that was holding pretty well pre-market. That one is pretty good. But VWAP is especially good. So this is one of those areas where I know that there's enough people out there that are going to be buying around the VWAP. And they already have orders ready to go. They're hoping the stock dips down and picks up their order and then pops right back up. So $16 volume weighted average price, that presents a dip opportunity. And that's the strongest one because at that time the stock is trending very nicely. Now, as we start to go into more sideways consolidation above the VWAP, because we're in sideways consolidation, I'm not going to be as interested in doing dip trades in general. I'd prefer to do dip trades when a stock is trending strongly, when it's moving up quickly. And so what you can see here, your moving averages are pulling away. Your MACD would be opening up, therefore. And in this area, your moving averages are pulling and squeezing back together. They're converging. So the convergence and divergence. We want to be trading when it's moving up quickly and pulling away. When it starts to get into this sideways consolidation, I'm really not interested. Now, this is an instance of buying dips off support, and this is ascending support. So we have a trend line right here, as you can see. Right there. And this was connected by connecting it right down here and then right down here. And so it did a false breakout at 650, goes to 655 and then big red candle. And then I started thinking, okay, you're gonna have some people that are panicking out. They're bailing out because they got in too high. They bought for the break of 650 right here, which, 1 minute pullback under psychological resistance. That makes sense. I'm not against that type of trade, but in this case, it just didn't work. it reverses, they stop out, but where will we see a bounce? Where will we see some short covering? And so with these lines already connected, I was anticipating a possible dip right in this area. And so as soon as it happened, I bought that dip. And we got a nice bounce right there, back up to 640 or so, right? So it's starting to move back in the right direction. Again, some of these are just a nice quick 5, 10, 15, 20 cents a share off the low. Others become a starter for an ad, up here, and then an ad through the high, and then a move back up towards, the next resistance level where it's whether it's the half dollar or the whole dollar. This is another example right here. So in this example, this stock was very strong from 370 up to 470. It does a micro pullback, pops up, it flushes down. In fact, at the low of that candle, that's a little tricky as a double bottom because I do have a line drawn there, but this was actually the low. I'm not sure if I would have taken that trade or not. This is that false breakout and then a flush, and we do see that enough that I will sometimes go ahead and take that dip trade, but it is a little riskier. But then this one right here, right there, it comes back now to that level, and it's hit it once, twice, now 3 times. So that right there at 440, 442 could have been a dip. Comes back up to 460. So it's only 20 cents a share on the bounce, but that's not bad. 20 cents a share, 2,000 shares, it's $400. So, you do that a couple times a day, that could be pretty nice. But then it comes down a little bit lower. It actually breaks below its 9 and its 20 moving averages, comes down here, and at this point, probably not necessarily looking at dip trading, just watching to see what it does. It curls back up, and it breaks through 440. So the previous level that was a support level here and here and here then becomes resistance here and here. So now we know that that level is pretty critical. Okay, so, and again, what makes you better at trading dips is your technical analysis in general. If you're going to just start trading dips but you don't understand ascending, descending resistance, how to draw those lines correctly, horizontal support lines, then you're at a disadvantage. I would also say that I think dip trading is a riskier strategy because general momentum trading, where you're buying the first candle to make a new high, you're buying breakouts, those are easier to see on a chart. They're more obvious, and therefore a lot more traders will be trading them. More traders trading them means there's going to be more volume at those very predictable spots. So I think those are a better way to get started, which is sort of typical gap and go momentum trading, like buying this break here over 460, and you see the nice volume that comes in. But having said that, once you master that, then dip trading is a really nice skill and strategy to add in because it can allow you to start trading momentum a little before that breakout. So then by the time the breakout is happening, you're already in with a good cost basis, and maybe you're adding, and so that can make your winners a little bit bigger. If you're going to start with dip trading, it may be because your broker is not as fast, and so you feel like you got to be in on the dip, and it makes it a little easier, and that's fine. That works for some people, but I do think dip trading is a little bit more difficult to master than momentum trading and your sort of standard gap and go. All right, so let's look at this one. So this is a bounce off the support of the volume weighted average price. So I'm going to pull up a live trading video here, and we're going to watch this. All right, so this video, this is like a 20-minute long video. I'm not gonna run through the entire video, but I just wanna show you the dip, especially off support. So this is a stock, just to get context, WAFU, it's up 45% on the day. It's a NASDAQ listed stock. It's got 10 million shares of volume, so we've got great volume. The volume weighted average price is at 1185. It's currently trading at 1194 by 12. So it's very close right now to the VWAP. So this is potentially right here in this area, a spot to be watching for a dip off of the support of the VWAP. And the question is, does it pop up off the VWAP? 5 cents, 10 cents, we'll find out. So right there, I took a starter of 6,000 shares. Now I did it in 3 increments with the hotkey, filling at 1206, 1210, and 1211. So I've got 6,000 shares at 1208. All right, so we've got 1208 on the ask. And now here's the thing that's important. This stock actually broke below the psychological support of 12 and then got back above it. That's a really good sign of strength. And right underneath that $12 spot, it's got the volume weighted average price. Typically in this scenario, I would be setting my stop at about $12, which means I'm risking 8 cents a share, less than 600 bucks. I'm risking like $480 on this trade. All right, so now that we have right now 12.15 on the bid and 12.17 on the ask, I'm already up $250, which is not bad for a quick little dip off support. Now there's 12.16 on the bid and 12.19 on the ask. There's 12.19 on the bid, and now I'm up $604.93. So this is a dip off the volume weighted average price using the whole dollar as a sort of second level of support. So on this trade, it's 12.19, and looks like I put an order at 12.50. So I'm already getting in the mindset with my hand over the buy button, potentially to add, thinking that if this does go over this level, so I did add there at 12.22 and 12.25. So now I'm holding 9,000 shares, but my cost basis moved up from 12.08 to 12.13. But I'm up $1,000 right now. The current time is 10:24 a.m. Now, this 5-minute candle is going to close in 1 minute at 10:25. And notice how right now it's forming a bottoming tail, with the bottom of that tail bouncing off the volume weighted average price, right down here. And so the first 5-minute candle to make a new high is what we would then be looking for, and back of mind target could be a retest of 13. All right, so now we've got 12.31 on the bid by 12.35. So we've bounced nicely off of 12. We've got 12.35 on the bid by 12.37. I'm up $1,999 on the trade. We've got 12.40 on the bid. I'm now up $2,359, and notice on the bid, we have a 10,000 share buyer. So I could, if I wanted to, sell right here on the bid 9,000 shares and lock up $2,359. All right, so let's keep watching. But also note, we still have 53 seconds until this 5-minute candle closes. But right now it's turning green. Okay, so that's good. So now we've got 44 by 48, 43 by 44, and a little bit of a dip. Okay, not uncommon. We hit the $half, just about, of 12.50, and we pulled back. I just added again at 12.47 and 12.48. Now I'm holding 11,000 shares. Cost basis has moved up to 12.19. So I'm adding now as it's going higher. And this is a place where I'm looking for the break through 12.50, the psychological support. We didn't get it immediately. I took half off the table at 12.43. So now I'm holding, I've sized down to 3,800 shares. I did lock up profit there, and the new order to add back is at 12.51. Now I still have the 12.19 average, but note that I took some profit off the table. Right there, I bought at 12.40 and 12.43, looking for a second attempt for the stock to break through 12.50. Cost basis has moved up to 12.29. We just had 12.50 on the ask and 12.52. Now look at this chart. We have now 9 seconds before this 5-minute candle closes. So when the 5-minute candle closes, we're going to look for the first 5-minute candle to make a new high. So now we have 12.49 on the bid by 12.54. So by taking profit at 12.42 and 12.43, I protected myself. I took a little off the table, and then I added back. So I put a little profit, locked it up, added back. Now my new cost basis is 12.29, so I do have to be a little careful. I don't want to let it go all the way back down to being a red trade, but it is starting to look a little bit better here as this candle is about to make a new high. We have 12.52 on the bid by 12.56. Now another trader might have just taken the whole thing off the table right there at the $half. And now I've added there at 12.61 for the 5-minute setup, the first 5-minute candle to make a new high. And I was able to take some profit off the table at 12.66 and a little bit more at 12.59. We hit a high there of about 12.76-ish, 12.77, but then dipped back down to 12.50 back on the bid. So that first candle made a new high, but then pulled back. Now I'm just holding 800 shares. So for the most part, booked my profit on that trade, and my cost basis has gone up to 12.43, and I'm basically selling the rest break even. So that began as a dip trade. It was a dip off the volume weighted average price at 12.08, and then I added into confirmation. Now getting into adding is going to be a lot riskier. It's going to be a lot more aggressive. That's not something most beginner traders are going to do. If you just start with an add, one entry and one exit, that's a better way to manage the trades initially. And then you start getting more comfortable and more confident adding and taking profit and so on and so forth. So that was the bounce off the VWAP. Let's see. I don't remember if there's any other. Now, so this ends up going up to 13 here. Do I take another trade in this area? It looks like I do, but this looks like maybe more of a breakout trade. Let's just see. So this right here is a little bit of a different setup. This is a typical kind of momentum setup. Buying the break of 13, goes up to 14.60. So, you know, in hindsight, that entry off of 12 was phenomenal. And of course, I took most of my profit in the 12.60s, and now here it's at 14.60. And you never know how high they're going to go. So it's always great to see them go that high, but you just never know how high they're going to go. So I kept trading it. There's $15. It kept moving higher. So good to see that, but I don't think there's another. Well, there might be some. Well, let's see. Are there any other good dip trades in here? Let's see. Let's see if we got a little dip here. This looks like. So this is a bit of a dip trade off of 1450. So you can see here it's holding 1450, that support level. So as it was proving it was holding that level, I started an entry there at 1462 and 65, and the stop is 1450, which is psychological support of the $0.50. So if this breaks over 1475, then we're looking for a move back up over 15. I added there at 1479 and 1480. So now, in this case, I'd be looking for the break back over $15. There's $14.85 on the ask. There's now 15 at the ask. And again, that started as a dip trade. And right there with 9,000 shares, I'm in at $14.81. And you've got $15.09 on the ask. That'd be 30 cents. We'll see how high it ends up going. Looks like it tapped that level and then kind of pulled back. So didn't get a full 30-cent winner out of it. But got a winner nonetheless. So that was another, in that case, dip off of a double bottom support because it had held that level, and psychological support of the $0.50. In this case, you have an extended 5-minute chart, but dip trades can still work. You just have to manage your risk on them and trade them cautiously. That was another little dip trade right there. That, though, was a little bit more of a panic. So that's a bit of what we're going to talk about in the second strategy, a bit of a panic sell-off. So we'll save that one for in just a minute. Okay, so let's see. Let's jump back in here. Where was looking for my slides. Okay, I've got these ones. All right, so I'm going to just pause that for a second. All right, so that was the bounce off VWAP, and then this is a bounce off VWAP / double bottom. All right, so let's check out this one. This is a different live trading archive. So in this case, let's see. This stock is currently trading at about $16.15. It's up 200% on 13 million shares of volume, which is pretty good. Let's see. All right. So in this case, we have a couple things we've got going for us. We have the volume weight average price, which is at 1579. So we've got 1579 down there. We have 1550, which was previously a resistance level, but it broke over it. So that could be support if it does break the volume weight average price. And we have this ascending support line right here. So we've got a couple of different levels all merging right around 16. And it looks right there like there's a bid at 16. Now we've got a little bit of a spread here. So this is a little tricky because you've got a spread, but there's 1604 on the bid, 1611. There's a 10,000 share seller at 1611. Now it's breaking 16. And watch this. We know the volume weight average price is at 1579. So I took a starter there. I only got a partial fill, it looks like. I don't know. Oh, you know what? I might have meant for 5,000. I don't know. That's not typical to start with 500 shares. But in any case, that's fine. So I've got a starter there. Yeah, so I think I meant for 5,000 shares on that one. Well, that's fine. It is what it is. So back up here to the entry. So the entry is a bounce right at the volume weight average price. I press the buy button. I fill it 1568. VWAP is about 1570 something. So it's just below the volume weight average price, but that's fine because I can buy the dip right there. And then set a stop at psychological support of 1550. All right, and then I'm looking for the break back over 16. We get the break over 16. Watch for it. And it looks like I add for the break of 16. And then as soon as we get that pop back up over, so added right there for the break back over 16. As soon as we get the pop back up over that level, it goes right there to 1625. So there's 1625 on the ask. That ends up being a 50-cent bounce. That's a 50-cent dip trade. So that right there is a bounce off the volume weight average price. You end up having pretty close to a double bottom with this previous low, and it, although broke through this descend or ascending support line, it ended up closing above it. So a nice little dip trade there on that one. All right, so we'll pause that and go back over here. Okay, so this one is a bounce off support. All right, so this one, bounce off volume weight average price out of a halt going down. All right, so it looks like this one's gonna be a little more, a little wild. All right, so let's see what we get here. All right, so this is a stock. It's up 75%. The volume is a little bit lighter, 3.2 million shares, bigger spreads. VWAP is at $42.23. All right, so we're watching for a little bounce off the VWAP down here. Watching for resumption. Okay, so the halt time, oops, by the way, well, I won't go into that. So anyways, we'll just continue. All right, so I have a starter at 41.95, which was just below the volume weight average price. This is, while it is a dip off the volume weight average price, it's a little bit of a dip off of sort of a panic flush because it's such a big sell-off from 47 down to 42. But in any case, so I added there for the break over $43. And there's 43.20, and then take half off the table as it pops back up there. Cost basis is 42.41. So we've got 42.89 on the ask, 42.98 on the ask. Looking for the break back through 43. Big spread on this stock, and there it pops through 43 and goes all the way to 43.98. So I take some off the table as it breaks through that level, and then you'd ask yourself, is it going to break 44? If it breaks 44, then you're looking for 45. The next halt level is at 44.40. But you have a really big spread right now. So in this case, was able to sell the rest, I think on the ask. Actually, I'm not sure. But in any case, that was a bounce off the volume weight average price. Smaller share size. This is a stock that had pretty light volume and had pretty big spread, so it's a little bit riskier. Okay, so those are a couple of examples of the first setup, which is buying off support. So double bottom, half dollar, volume weight average price, ascending support, descending support, possibly around the 9 moving average or something like that. All right. So now we're going to talk about setup number 2. This one's a little bit riskier. So, and again, trading is risky in general, but this is buying a stock that's literally dropping, selling off hard. Okay, so this is what you see. See that huge bottoming candle? So this stock had a high of 17.59 and dropped all the way down to under 16. So it dropped about $2 a share to like 15.79. And then it bounced right back up to 17. So that type of sell-off, and it was on high volume, that's like a panic flush. All of a sudden it starts dropping. People start getting stopped out. It just drops really, really hard. And then it bounces right back up. Now, they don't always bounce right back up, which is why this is a risky trade. But what we had going for us here was that the stock was already up quite a bit on the day. And it bounced just about right off the volume weight average price. And then it did something similar. What it did right there, did it again right in here. So this kind of panic flush and then bouncing right back up. All right, so let's look at a couple examples of this. Again, live trading archives. So this is something that I do a lot of. For Warrior Pro students, we have a lot of live trading archives, so we can review these types of trades and try to really get an understanding of, you just watch them again and again and again as much as you'd like. Just to get an understanding of these setups. History repeats itself in the market. All right, so this is a panic sell-off. So here, what you had, the stock had just dropped from $16 to $14.26. That's a 2-point drop. That's a big drop. All right, so let's back that up for just 1 second. So it was almost halted going down, which is at 14.10. Almost looked like a halt going down. There was a seller there at 14.24, and then it popped up. I got in at 14.21 with 1,000 shares. Typically, an add on this would be 14.50, 14.75 for the break back over 15, depending on how aggressive I'm feeling up for being. It's already having trouble breaking over 14.50. And now it's gone lower. This is an example in a way of catching a falling knife. I'm in a little early, fortunately though, only with a starter position. And now I'm watching. So this is a stock that's about to get halted right here. 56 million shares of volume. But I'm going to show you something, a false halt. See right there, it starts to thin out, and that's where I add for a false halt trade. That right there was an instant trade from 13.96 up through 14.50. That was a really nice trade. And it may have gone higher and whatever, but that right there was a really nice trade off a false halt. All right, let's look at another one here. Okay, so this video is going to also have a false halt on Pixie. So Pixie is up 77%, it looks like. Let's see. I'm going to start. Well, let's watch this here for just a second. So we're up 107% right now. Had a high of, looks like around 15. So the volume weight average price is at 12.25. The high of our 1 minute opening range was at 12.58. So 12.50 could be psychological support. That strong sell-off right there. Bought the dip, 1,000 shares, 12.74. Stop is probably going to be around 12.50. I'm already up 10 cents on the bid from 74 to 85, but that's 13.09 on the ask. Haven't added yet. Now there's 13.25 on the ask, and I'm taking some profit off at 13.20 for almost 50 cents a share. So now I'm out of the trade, and I'm looking for another possible dip. See that bid at 1250? There, that's what we call a bid stack. So the bid is stacked right there at 1250. So let's see if we break back up over 13. Okay, so this is a possible place to be a buyer. It's a little risky, but we're right at the volume weight average price. False halt right here, maybe. Okay, I've got a starter at 1228. Watching for it to pop up a little bit more. So this is a little tricky here because that is not the spring off a false halt that you usually look for. But so in that case, not a great trade, but I got back in at 1246 as it started to pop up and taking some profit at 1273 in that case for over 25 cents a share, which is still decent, not as big as it could have been if I'd held from 1228. I got a little nervous on that one. Now it's back at 1215. So it's back down here again. This is clearly a stock showing a lot of selling. And this is an area where I started to get a little cautious about not wanting to do too much bottom fishing in terms of trying to buy dips if it's just clearly going lower. And I think that's probably an important lesson with buying dips is not to just hold and hope that it's going to go back up because sometimes they don't. All right, so right here, it's kind of at the volume weight average price, right around it because it's 1225. So if it breaks back over 1250, this could end up becoming a bottoming tail candle, although on the 5-minute chart, we have this higher volume red candle. It's a topping tail, so that's a little bit riskier. 1203 is the halt down. And is it going to halt? It looks like it might in this case. It looks like it might halt going down. So it did, in fact, halt going down. So let's move this a little bit further forward. So this ends up being another kind of strong drop. Let's see, let's go a little further forward. And then, you know, this one ends up rallying. It goes from 11 back up to 15. So now we're back in sort of the bullish mode. It's above VWAP, it's strong. We've got now 13 million shares of volume. Our halt down is 1306. Watch this. We're getting a little bit of a panic flush. Okay, this is a spot where I could take a dip off of this extreme level. Starter at 1315, 2,600 shares. Volume weight average price is 1281. I would expect it would bounce off that level. So I'm in at 1315. There's 1377 on the ask. Now, if I wanted to go ahead and add at 1375 for the break over 14, this could end up turning into a trade where I could size up to a pretty big position because of that starter entry on the dip. If your first entry is at 75, you might not feel as comfortable going full size. So took a little profit off the table there, 1362. And we'll see if that goes higher. All right, so back up, back down. So this is now getting into a double bottom area right in here. Sort of a double bottom right around 1292. I'm in a little high on this one. Not sure why my entry's that high. Looks like I'll be able to get out, maybe break even. But that could have been a nice double bottom off of 13 right down there. But then it ends up breaking below the VWAP. So it goes below the volume weight average price as it get back above it. Actually, that right there is another double bottom right at 12. Let's back that up for just 1 second. So it's about to do a double bottom right off 12, right here. I'm already in at 1250. So there's 1236 on the bid. There's 31 on the bid. So when they struggle to break back over critical resistance levels like $0.50, that's when you can get these flushes. So it flushes down to 12. Now I have 2,000 shares on this, which is not a very big position for me. But you want to see it hold 12, that psychological support, and it looks like it is. And then that right down there at 12.28 could be a dip. And I add it at 12.19, brings my cost basis down to 12.39. So then if it comes back up to 12.39, I'm back out, break even. So sometimes I will use the dip trade to help me manage my risk, and see there it comes back up to 12.50, 12.60. It's important when you're trading dip trades to leave yourself room, because sometimes you will have the right idea, but your timing will just be wrong. All right, now this one is another live example. So let's check this out. All right, so this is a stock that was pretty crazy. It's up 600% on 11 million shares of volume. It's about to halt going down, and I'm taking a starter at 1988. I'm thinking it's going to false halt. Now, this is the moment of truth. Now I added another 1,000 shares. Okay, it false halted just for a second. I've got 5,000 shares. Okay, I'm in 5,000 shares, and I'm in at 1993. I stepped up, and I bought the dip. All right. So now we have $20.40 on the ask. We have $21 on the ask. $21.78 on the ask. So at $21.78, this is almost a $10,000 trade already. Almost a $10,000 dip trade. I took half off the table at $21.78. Now that's 22. That's $24 on the ask right now. 24 on the ask. I took more off the ask at just under 23. I'm still holding 1,300 shares from 1993. 11 million shares of volume. So now let's see what this does. This gets tricky here when you've got these types of spreads, because you get in this going the wrong way and you can get really crushed. There's $26 on the ask. 26 on the ask. Up $125,000 on the day. High a day was $29.61. Now starting to wonder, can I add back? There's 27 on the ask just for a second, and I went ahead and added back. That's a high a day trade. Entry was at 26. So I added at 26, added at 27. There's 28 on the ask. Halt level going up is 28.07. I'm taking now I've got 5,600 shares at 26.55. I'm taking half off the table. There's 29 on the ask. $29 on the ask. So that's a dip trade from 19 all the way back up to $29 a share. It's a 10-point dip. This one was pretty impressive. So now in this moment, I'm holding 3,400 shares and I am down. That's 26 on the bid, $2 a share, down $7,000. Now I'm down 12,000. Look at that. Look at how quickly it goes the other way. So I'm still holding, and I went ahead and added at 26.31 and 26.45. Now I'm averaged at 27.23. So down 12,000 for a moment. Not panicking. I do not want to panic sell. I don't want to panic exit into a drop like that. I want to be a buyer. So I bought the dip. Now looking for the break back over 28. There's 28.50. And just like that, I did a swing from down 12,000 to up 4,000. Now I'm up 8,000. Now I'm up $12,000. What a swing in the P&L. Wow. Are we going to break through 29.61? Halt level is $30.05, up 13,000. Big spreads. Seems like there's sellers against the double top of 29. I'm looking for that possible break through 29 and then 30. This is now forming a 1-minute pullback here. This is probably a spot where I'll consider adding on a dip for the break through the highs. Look at all that green volume there. I added for the break through the high at 29.61. 29.50 was my add. Looking for the break of $30 and then sizing down as it rejected against that level. And that's how quickly some of these can move. So you can see how in that instance, that high a day entry ended up being, kind of pushing it a little bit too hard. I was being too aggressive there. Now, on the other hand, we could have seen this break 30 and squeeze up into another halt, but in this case, locked it up. And I don't remember where I finished the day in profit, but over 100,000, I believe. All right, so let's see. I'll show you one more quick one, and then we're going to look at the third style of buying the dip. So this was SNDX. This will be a quick one. Panic flush. See how it's just dropping like that? Oops. Back that up. So, this has just dropped from $17 to $15.86. It's a huge sell-off. So you get traders that get stopped out, the stops fire, and all of a sudden you get this flush. I bought the dip down there, 1,000 shares, $15.95. Watching 16.25, $16.50 on the ask. That's a 50-cent dip trade. And I'm all out, $500 on the dip. Stock's up 43%. Okay, so now let's talk about the third setup. So we talked about buying the kind of easy-go-lucky dip off of the high. So a dip bounce off support. Maybe it's off the volume weighted average price. Maybe it's off ascending, descending support. Maybe it's off a $half dollar, whole dollar, a moving average. Sometimes we will see panic sell off, and they can you can get a panic sell off that bounces off support. That can certainly happen. The panic sell off, however, is characterized by the instant flash down. That instant 50-cent drop that's what we're kind of honing in on there when we're talking about panic sell off. Whereas setup number one, buying off support, usually it's not that level of panic. It's just it pulls back and it holds support, and then that provides an entry for a move back up. That's more common. Now, setup number three is buying the dip, and this is more of a reversal scenario. So this is when we have something that's been weak, quite weak, usually is at low of day, and is now starting to turn around. So this is an example of a stock that squeezed, big move from 9 to 10 up to almost 12. Then it drops all the way down to $4.50. Where's the entry? The first candle to go green. When you've got 5+ consecutive red candles, for me, I manage my risk that the first candle to go green is my entry and my stop is at the low. All right, so if it goes green and immediately reverses, well, I'll cut the loss. But the first candle to go green is the entry. So right here, 450, this bounces from 450 up to 550 to 650 to 750 to $8.25. That's a 100% bounce. That's impressive. That is seriously impressive. Now, it dropped from 10 down to 4, so 60% drop and then a 100% bounce. Volatility is the name of the game. And so manage your risk and obviously be mindful of the fact that trading is very risky. Here's another one. This was on GameStop. Stop. $480. It drops all the way to $120 a share. The first candle to go green is the entry right down here. I have a live trading archive of this. It bounces from 132 all the way back up to $300. That's crazy. That's seriously insane. All right, so first candle to go green. Here's another one, Tesla. First candle to go green, and you get that reversal. Now, it's obviously nice to not have to trade by yourself. One of the challenges with learning to trade is learning the strategy, trying to figure out a strategy that works for you, and then being part of a community. So at Warrior, we've got a community of traders. We've got our chat room. We've got the live broadcast. So you can actually listen to the trading as it's happening. You can hear me as I'm calling out what's going on in real time. And you've got students who are all helping support you and stay disciplined. Stay disciplined. Get green. Don't overstay your welcome. You're red. Cut the losses. Get out. Stay focused. It's important to surround yourself with the type of people that you want to become. So it's been a pretty wild year. Norwegian Cruise Line Holdings. This was last year. Let's look at this one. The entry here was the first candle to go green. All right, so Norwegian Cruise Line Holdings. Let me update the, let's see. All right, so this is actually a video of a video, but that's fine. All right, so again, those who haven't already checked it out, please come over to warriortraining.com/strategy. That's where you can learn about our entire Warrior Pro curriculum and the strategy that I teach you. And if you haven't hit the thumbs up, please hit that thumbs up, and I hope you're subscribed to the channel. All right, so doing a little kind of just analysis here. This is part of a live archive for students. So let's see. So Norwegian Cruise Line Holdings. All right, so it was halted down, and it had dropped from $13 to $10.31. That's a pretty big drop, obviously. And so what I was looking for, first candle to go green. Now, this gets into something that's a little complex with circuit breaker halts. Usually, when we have these halts, what is very common is that they halt down and they open lower. In this case, it halted down and was showing to open flat. So I bought the dip at 10:31, and that went then right into the first green candle. So that, for me, already the market was kind of tipping its hand that it was going to go green just by the fact that it was looking like basically flat open, and then at the open, it held that level and didn't go lower. So now I'm in this 10:31, and there's that bounce. First candle to go green, 10.83, ends up going back up over $11 a share. So that ends up being a full, almost $1 a share bounce off the low. Again, first candle to go green. But let's look at the GameStop trade, because I think that's one that you guys are going to be more into. And then that'll be our last one for today. All right, so let's look at GameStop here. All right, so this was crazy. This was the biggest drop I had ever watched happen right in front of my eyes. So it's halted down. It was at $153 a share. So I think that we're going to watch this. So it resumed, but immediately just halted again. So it's kind of like a really quick resumption. It's not even really worth showing you, I don't think. So let's see. I'll show it to you since I'm already scrolling to it. So it just opened and halted down again right there. I had my hand over the buy button, but it didn't show me a false halt. And I was like, I'm not stepping in front of this train. Not yet. Not yet. I'm going to get ready. I'm watching. But I got to be a sniper on this one. I got to be really, really careful. Okay, so we're halted down at 126. And let's back this up. Okay, so no position yet. So watching for resumption. All right, so changing some of my custom orders, just kind of like adjusting my keys a little bit. That's typical on something like this. Okay, so this should resume in just a moment. And it resumes, and there's an 89,000 share seller at $120 a share. I took a starter of 200 shares. I got filled between the spread at 115. I'm in at 115. The low is like 113.50. Here we go. Added 200 shares, 120. That's 125. I added another 200 shares. That's 126. I added 1,000. Now I added 1,200. That's 128, 132. $10 a share right there. So that right there is $10,776 of profit buying the dip. Now you don't see a dip trade like that every day of the week. Not at all. That was a pretty rare one. That was a pretty special one. But dip trading is a pretty big component of my strategy. I am doing dip trades on pretty much a daily basis in various forms. Dip off ascending support, dip off half dollar, whole dollar, etc., etc. Okay, so we're going to watch for resumption here. Now, my biggest regret on this is that I didn't hold the whole thing to back to 300. Of course, I had no way of knowing it would go back up that high. All right, so let's see. So it looks like we're still halted, but we're going to watch a resumption here in just a moment. Okay, so watching here, resumption, orders at 140. So we halted at 132. It opens at 144. I'm up $22,000. That was the first candle to go green. Now I added right there up to 2,000 shares at 144, 143. I was looking for the break over 150 and then immediate second halt going up. So right here when it starts to go red, I panic. I'm like, uh-oh, this is not good, because now I'm starting to size up a little heavy. So I added more right there, and now I'm sized up pretty heavy on this. 3,000 shares is pretty big. Whoa, look at that, 149.85, 150. The adrenaline. Wow. Let's back that up for just 1 second. Okay. So I added for that trade through the high. 3,000 shares, 3,500 shares. So this was a $400,000 position in that moment. It's got 26 million shares of volume. So I added right here, cost basis, 135.40. That means if I sell the whole thing at 145, how much will I make? $34,000. Look at this. There's 48. I add for the break of 50. Now I've got almost 4,000 shares. So $500,000 trade here. And I'm taking some off 3 cents below the high there. High is 150. There's a seller. And I'm out. I'm popping it out. And if I'd only known. So I'm all out at 50. That was about a $45,000 dip trade. Wow. And I left so much on the table. It goes to 150. It goes to 160. It goes to 170. It goes to 180. It goes to 200. It just kept going. This is the day I was up $485,000. Wow. Wow. Right there. That's pretty wild. So dip trading is a important component to my strategy. I actively trade dips, and I think it's important for you guys to learn them, but I also think it's important for you to understand that dip trading is not the only strategy. It's a component of momentum trading. Again, if you haven't checked out my video on gap trading, trading the gap and go trading, I'll put that right there so you can see. That talks about my stock selection process, how I find strong stocks to trade. Again, those of you guys that want to learn more or you'd like to take one of the classes that I have, we'd love to have you join us at warriortrading.com/strategy. There's the strategy page, so check that out. And you're all in different places in the learning curve. So for some of you, you're just going to want to jump right in. You don't want to go watch a webinar. You don't want to waste your time on that. You want to just jump into the classes. Those that want to just jump right into the classes, go check out warriortrading.com/strategy. Those of you guys that want to attend my free class, which is a webinar where I basically teach you the stock selection process that I use every day, register for the webinar. I'm happy to have you do it, but if you're just looking right for the strategy, then go to the strategy page. It depends on what you're looking for right now, but I'm happy to help you. I'd love to be able to help you learn, help you gain some financial literacy. I think the goal is, if you know more about the market and you're walking away from these classes with a better understanding of how the market works, then you're doing well. As always, you have to understand that trading is difficult and that most people lose money and there's no guarantee for success. So do take it slow. I always encourage students to trade in a simulator before they put real money on the line. Because the fact is, if you can't make money in a simulator, you shouldn't put real money on the line. It's just as simple as that. Okay, so with that, why don't we do a little bit of Q&A, and I'll just see if I can answer some questions for some of you guys. So I'm going to switch here. Tune in for as long as you want. Those that want to just hang out for some Q&A, I'm your guy, and let's do it. All right, how long has my video been out of focus? Hopefully not too long. Oh, I forgot that we are on air. Okay. So let me pull this a little closer to me here. So I'll kind of go back and forth during Q&A between charts and just answering questions. So I saw a couple of you post some questions. Oops. So let me just go and catch up to those that I already missed. All right, let's see. So, okay, there's that. Turn that up a little bit. All right, let's see. So James asks, hey Ross, can you talk a little bit about times where you wouldn't take the dip? Okay, a couple of instances. One, if the stock is panic flushing in response to a breaking news headline. If news has just gotten posted and that's why the stock is dropping, I'm not going to be a buyer, because that's not a irrational dip or just sort of the weak hands getting shaken out. That's true market reaction and algos responding to breaking news. So breaking news, I'm not going to buy the dip. That's the first scenario. The second, I'm generally going to be very cautious doing any type of dip trade below volume weighted average price, except scenarios like GameStop, or what you can see over there on the chart, because in that scenario on GameStop, that was at low of day and we had so much room to bounce back up to the volume weighted average price. So in that case, I was okay taking the trade. But rarely do I take dip trades below VWAP. Rarely do I take dip trades when, and pretty much never if it's on breaking news and it's flushing. And those would be the primary instances where I would be hesitant to take a dip. Larissa, in the moment when you take a dip off of something like a rejection, how do you know it won't just form a big bear flag going down? So my bailout spot is the low. So in the case of GME, my starter was at 115 and the low was around 113.50, which was a really good dip trade in that instance. But so for right there, that dip became, the low of that point, 113.50, became my stop. So if it flushes, it bounces up just a teeny bit and then is approaching, breaking back to the low, that's where I get out. Because I don't want to be holding it if it's then making new lows, because that's when I get caught into the habit of averaging down, and it's just a bad trade at that point. Well, it's not, it's maybe the right idea, but my timing wasn't right, and it's better just to cut the loss and then get back than just to keep holding. Because look, I could have started doing a dip on GameStop at like $200 or even $300 up here. Way up there, it still looked like, that was maybe the time it was going to turn around, and it went a lot lower. It's a good question. Thank you for that, Larissa. Let's see. James got your question. So Craig, how do you know, Craig, do you buy after the candle closes green? So the first candle to go green, right, by the time it closes, sometimes the stock is already halted going back up, which was the case in GameStop. That requires a degree of anticipation, which requires keeping a fairly close eye on the time, because we know when candles close. There's a lot of traders who wait for the first candle to go green and then buy the second candle as it makes a new high. That's a candle over candle pattern, so first candle to make a new high. And I do take that trade a lot of times in momentum going up. But on dip trades, I usually like to have a better cost basis, which means I'm more likely to take a starter position around a $0.50 or a whole dollar if I think it's going to bounce. Now, GameStop, I honestly wasn't sure it was going to bounce there. I didn't really know where it was going to bounce, but I finally, after that many halts going down, was ready to take a starter and see what happened. And in that case, it was the right spot. So there is a degree of educated intuition. And that's one of the things that it takes time to gain, which is why it's really helpful to be trading side by side with someone who's been trading for a long time, because you can piggyback a little bit on that intuition. You don't want to blindly follow me or anyone else, but if you can listen to what I'm saying and you hear me saying that, oh, this is my commentary. This is what I'm thinking and feeling about the stock. It's down this much. We've got 7 halts in a row, or whatever the case is. I'm starting to think that this is time to buy a dip. To the extent that that helps you, it just is one more data point, and it's, as a beginner trader, I think valuable. So yeah, Craig, usually I'm buying to anticipate that candle is going to close green, and then to Larissa's question, if it then retests the low, I'm going to cut the loss and get out. Now remember, so on that trade, I made $45,000 on the GameStop trade, but I started with a position of just 200 shares at 115 with a stop at 113.50, meaning I was really only risking like $400. That's pretty incredible. I was risking 400, and then from that point forward, I was green on the trade. And when I was adding, I wasn't really risking going red. I was just risking not being as green as I could have been. So Scott, your question on stops, I hope that also answered. Stop typically at the low of the dip. But again, depending on the volatility of the stock, there might be some scenarios where we get the initial panic drop, I buy the dip, it pops back up, and then it does retest, and then that becomes a double bottom. And if the range isn't too big and I'm not hitting my max dollar loss, I might be okay holding for a retest for a double bottom, especially if it's at a level that feels very critical, like the volume weighted average price. It's above it. So there are some instances where I would say, you know what, I'm okay holding this, and let's see if it does bounce here. Adele, what type of exit would you use to exit a dip trade in the case that it only bounces a small amount? Well, it depends on the spreads. Usually, in almost every case, I will at least try to sell on the ask. And if I don't get filled, I don't get filled. So I'm going to try to sell on the ask. And if I don't get filled, I'll cancel the order, and then I'll press Control Z and be out on the bid. If you have a big spread, sometimes just in the time to put the ask and then cancel and then hit the bid, you end up being back to break even or even red. So there might be times where I would hit the bid, maybe if there was a big buyer on the bid, but I'd always try to get the best price. Steve, do you ever notice the ask price lagging as it goes lower? Your hotkey gets you in higher than you expected. No, I have not had that happen on a regular basis. The exception is that when I have had really poor internet connection, then I've had lag. So that would be if I have an internet problem. Of course, it would be like the luck of the draw, because a lot of us travel. So, the one day you're having something really critical like this, you're on hotel Wi-Fi and you're late, you're delayed or lagging a little bit. Sometimes that's just the way it goes. Sean, when you first started trading profitably, did you go in with starter and then keep adding as it goes up? Or was it buy 1,000 shares and then sell once at your profit target? Generally, what I have done has been add really big at the beginning, and it's usually in blocks. And the reason I would do blocks was because when a stock would first pop up and I had a smaller account, I wouldn't know necessarily how many shares I could afford to take. So I would just do a block of like 2,000 shares. So on a $2 stock, maybe I could go ahead and take 10,000 shares or 20,000 shares. But on a $20 stock, I might only be able to buy like 2,000 shares or something like that. So I would just do the smaller blocks, but I would go boom, 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 pretty much all in right away until I hit my max size or max buying power, usually whichever came first. And then once we got the breakout, I would start taking it off the table, taking off half, taking off another half, and then scaling down. Now I'm much more aggressive with adding. And, this was an instance where my initial trade was 200 shares, and the only way I would have made 20,000 is if I held the whole thing for $100 a share. So adding was absolutely the best way to maximize on this opportunity on GameStop. But in the small account challenge that I just finished, and at the beginning of my last small account challenge where I started, the sort of biggest one that I've done, $583. When I started with less than $600 in my account, I went all in. So my first trade, I was all in, and then I would take it all off the table once I had profit. And I would take one trade a day. One trade a day. That's the small account way. Now, arguably, you could say one trade a day is also the big account way. Maybe. One trade a day is good. The only thing is that I think, like on a day like this, $485,000, that's obviously not just one trade. And there's no way I could have hit that with just one trade. So for me, the part of the calculation of how much I make is my average profit per trade, on winners, my average loss on losers, and then how many trades do you take, right? The more trades you take, ultimately, the more you'll make, unless you're trading with small size. But when you're trading with size as big as mine, you can't really scale up a whole lot more. You can, but maybe to 100,000 shares on some, but even that's going to be hard on others. So yeah, I do have to trade a bit more, and I do have to add. But I really think that as a beginner, one entry, one exit is a great way to learn. And just allowing yourself to take one trade a day is really good for consistency, just to try to get green and walk away. Or if you're red, walk away quickly and just take the loss and then, come back another day. Gabriel, let's see. So for a small account, let's see. Oh, so this was actually the same question. Taking a starter versus going full size. So my 2 cents on a small account, generally, for me, in my experience, was not to do starters, but to go all in. Once the account got bigger and was like $10, $15, $20,000, I started doing starters again, but not when it was small. What are the ideal dead cat bounce dip buys? So a dead cat bounce, you could look at something like GameStop in a way as a dead cat bounce. We would call that the reversal trade. And actually we have in the Warrior Pro classes, there is a whole section where we focus pretty exclusively on these types of reversals. So this is 1,352 slides. So up in the reversal chapter, we've got shorting bear flags. So where's this? We've got this whole section where we do talk about those reversals. And, I would say that looking for the first candle to go red is still a good approach, but I would just be cautious and be looking for a reason for it to bounce, and also be mindful about the fact that sometimes when we see things selling off like that, it's because there is some bad news out. So if there's bad news driving the sell-off, then the bounce isn't always really strong. But yeah, dead cat bounce or dip off the low. Again, I'm cautious when we have a very clear catalyst that's driving the stock lower. That's probably the only time. So the ideal dead cat bounce dip buy would be after a series of consecutive red candles, number one, which would be that setup number 3. It could be after a panic flush, but usually that's not really, you don't panic flush down like 100% usually. You sort of, that's not usually how that works, especially because of circuit breaker halts. So, and then the dip off support, setup number 1, sometimes you have a big sell-off and then it starts to slowly curl back up off the low, but then that becomes a bit more of a momentum trade and not really a dip trade. Yes, yeah, Sean. So question there, after you buy a dip, how do you manage your exit? Strictly off the level 2, or do you set profit targets based on the stock range? So I am setting profit targets based on what I'm sort of looking at as the psychological levels. So I've usually half dollars and whole dollars, and or looking at the high a day. So if it's a dip off the VWAP, back of mind target would be that it could go back to the high a day. That would be ideal. That's best case scenario, which we saw in that 10-point bounce from 19 back up to $29 a share. But taking profit as it goes up around half dollars and whole dollars into squeezes. I'm going to do all of that. I'll be watching level 2. If there's a huge seller that comes in, I might be a little more cautious, but not always. It depends on what my entry is. So really just taking out profit. I'm not the type of trader that just buys and holds the whole thing. I'm scaling out sort of as I have profit, as I'm feeling like, okay, I'm doing well in this trade. And Sean, regarding waiting for a 5-minute setup, the dip trading generally is not going to be focusing as much on 5-minute setups. Sometimes we are looking at, okay, this is a bottoming tail. If I have a dip here, this could then turn into a nice bottoming tail green candle. Then the first candle to make a new high could give us that trade back through the high. So there is a little bit of sort of thinking about in relation to the 5-minute pattern. With stocks that are really strong, that are going straight up or straight down for like a panic sell-off, waiting for the first 5-minute candle to make a new high. I mean, by the time you had it on GameStop, you really needed to already be in it on a 1-minute trade. So that would have been one where you would have missed. But 5-minute setups are good, and certainly dip trades, if you're looking for something like better for beginners, it's probably not this style of dip trading. However, a lot of people are really interested in trading dips. People hear about, oh, you got to buy the dip, you got to buy the dip. So these are the 3 ways that I buy the dip. And so that's why I wanted to share them, especially with folks on YouTube. So I always buy the dip at the ask. Well, almost always. Sometimes I'll put an order on the bid and just see if it gets filled when we have a big spread. I don't love doing that, but I will do it sometimes. But typically I'm buying at the ask price. So basically buying at market price, but as it's dropping. On the dip off support, off ascending support picture, on the second dip on the line, how would you be able to tell it's going higher? Let's see. So let me look at this one. So on the second dip on the line, how would you be able to tell it's going higher? So this one right here, so this was the first one. This was the first dip. This was not where I was. So right here it dipped. I think in this spot I was mentioning a possible entry at 440 to break back over what was a support level. And then this up here was a little bit of a better dip because it came down close to the yellow line. And this right here is potentially a trade that's worth taking a stab at for a dip. Right here, I don't know that I would have taken that as a dip trade because it was this candle and this candle that created the ascending support line. So I think this might have only been a dip to anticipate the breakthrough 440, but this wasn't, that yellow line wasn't there until that red candle had formed. Oh, and on the one before this slide. So this was a dip right here. This was a dip right here. These two created the line. And then this sell-off then was the bounce off the line. So you needed 2 points to create the line. So here the line was created, which gave us the dip right there. The dip right here, while you might have taken it, I don't know where the VWAP was because I didn't have it on this chart. This wasn't the spot I was watching or looking at for a dip. It was off of this yellow line here. So how's my strategy changed when buying dips above VWAP versus below? Well, for the most part, I really don't do many dips below VWAP unless it's a reversal trade. So my dips below VWAP would be pretty much just setup number 3, reversal trades. That kind of strong sell-off and then turning around first candle to make a new high. And then above VWAP is setup 1 and 2. A question there about averaging down. I will average down from time to time. I try to be careful about averaging down because, obviously if I took a trade and it's already gone the wrong direction, then averaging down really is just making a bad trade worse. However, if I have a dip entry and part of the plan for that trade was to scale in, I started with a really small size, then I might go ahead and add, but I just have to be really careful. So if I buy a panic flush, my stop is usually the low of that panic flush. So if it rolls over and breaks it, then I should usually just stop out. But if it rolls over and double bottoms, then I might average down just a little bit because it's holding the support of that double bottom. So yeah, it's a little tricky because generally it's not a good idea to average down, but occasionally I will. And so that's one of those things where, and sometimes it works and sometimes it doesn't. And sometimes when it doesn't, I'm like, well, that's, I shouldn't have, that's what I get, I shouldn't have averaged down. That was stupid. But then when it works, it's like, all right, sweet. It worked. That was ended up being a good trade. So that's always tricky. How much do I utilize the 10-second chart in the dip entry? Well, this is a 10-second chart here. This one was 1 minute. This was 1 minute. This was 1 minute. The 10-second chart, and I've said this a lot, the 10-second chart is great for showing an example of something I did because you can break down a 1 minute chart into, 6 little candles, 10-second candles. So I like it for that reason, but I don't find myself staring at it very much because what I'm primarily staring at is the level 2, and then I'm glancing at the chart. So level 2 is what I'm primarily focusing on, and then glancing at the chart. And when I glance at the chart, I'm usually looking at the 1 minute and the 5 minute. First 1 minute candle to make a new high, first 5 minute candle to make a new high, and that type of thing. So the 10-second chart at times is helpful, maybe on a halt resumption, just because it immediately shows sort of the strength. It's, oh wow, this thing's squeezing up. All right, here we go. All right, let's see. All right, so, well, I think that's about it. I'm happy to answer any other questions if there's others. Thank you guys again for tuning in. I hope you guys have hit the thumbs up on this video and hope you enjoyed it. Again, if you want to check out more of my strategy, go to warriortrading.com/strategy. That page will break down my strategy and the way that I teach it in our classes. All right, so thanks again for tuning in. I'm going to put up my disclaimer again. As a reminder, as always, trading is risky. You shouldn't blindly follow me or anyone else. My results are not typical. Take it slow. Trade in the simulator before you put real money on the line. Because the fact is, if most beginner traders lose money, you shouldn't be trading with real money until you've proven profitability. So do it in a simulator, in a safe place. If you prove profitability in the sim, flip the switch, then trade live. But always start small. If you want help in the journey, if you want to learn my strategy, I'm happy to teach you. You can come check out the classes that we offer. And if you want to just keep watching on YouTube, we're happy to have you there. One of the things that I was talking with a student last week, and she said how she watched, and actually 2 students on the same day, both of them said they watched a lot of videos on YouTube. One of the things that's tough on YouTube is that they were putting together pieces of lots of different videos. So, they would catch little tidbits here and there. Oh, okay, so I should do more of that. And they were religiously watching like all of my videos. And then finally they said, you know what, I'm trying to put together the pieces of this puzzle. I really want to make this happen. I really want to learn the ins and outs of this strategy. I need to learn. I got to join the classes. And they joined the classes, and they said for them, they were able then not to have to just piece things together, but the whole curriculum is right there. So they were able to actually really understand the nuances of the strategy. I have red days just like anyone else. My biggest red day is a recap right here on YouTube. I have green days. Trading is risky, but I'm out here putting out my strategy and sharing it with you every single day. So I hope you guys enjoy it, and thank you for tuning in today. So I'll put up my disclaimer as we end the video, and I'll see you guys first thing tomorrow morning.